Buying a home is super stressful. You finally got your offer accepted and now you need a mortgage. What does that really mean? We have Corey Ahlawat here from Greenway Mortgage, and Corey's going to tell us everything we need to know about getting a mortgage.
Absolutely.
Hi,
Pleasure. How you doing?
So finally the buyer has their offer accepted on their dream home. I'm assuming they've been pre-approved with you, but also tell us what's the difference between a pre-approval, pre-qualification, and what is a mortgage?
Pre-approval, pre-qualification often are the same thing. It's speaking with your banker, having them check your credit, your income, assets, and making sure that you can qualify for any offer that you're making. Goes a step further. You want to make sure that you're comfortable with the payments as well. Often as a home buyer, payment is more important than the price, and you want to make sure what payments you feel comfortable, and having that conversation when you're getting pre-approved. What are my payments? How high can I go on the payment? How that translates into loan amount or of a house that I can buy.
Absolutely. What makes your offer stronger, a pre-qualification or a pre-approval?
Pre-qualification, pre-approval are the same thing. It's either pre-qualification, pre-approval because they're right? They're done before you're approved. You can get an actual approval from a bank. So instead of a pre-approval or pre-qualification, a bank can take your information, send it to an underwriter, approve it, and now you're dealing with an approval rather than a pre-approval or pre-qualification, which makes you a stronger buyer.
You were qualified for a mortgage, submitted all the paperwork necessary to get the wheels rolling. What are some of the red flags that you have seen buyers do during the transaction that ultimately led to a deal falling apart?
Typically, three main cornerstones in any deal are your income, your assets, and your credit. You want to make sure that you don't run into any issues there. You want to make sure you're not going out there buying new cars or running up the credit card in anticipation of closing, buying new furniture, and taking on new payments. Definitely speak with your banker before you do any of that. Income-wise, you want to make sure that you keep your job. If you switch your job, do it before or after your loan is scheduled to close. Don't do it during your loan is scheduled to close.
Many buyers did not know that. We've seen that happen.
Yeah, absolutely. One of the things we often come across is maternity and paternity leaves. So if you're out on maternity or paternity leave, different lenders may look at it in a different way and may not allow you to close while you're out on leave until you get back and you're able to get your first pay stub. So it's important to make sure that any of those changes, you're speaking with your lender and making them aware of that, so that way they can make sure your closing is not delayed.
So when you find out that you're expecting, you need to call your family and your lender. Love it. That's really, really important. I did not know about switching jobs because sometimes buyers think, oh my God, but this job will pay me so much more. Let me just switch over, not realizing that it would make the process start from the beginning.
It doesn't start from the beginning. Typically, lenders require one pay stub.
Okay.
So if your closing happens to fall in the time frame of where you joined the job and before you have the pay stub, you may not be able to fit that window for closing and may not be able to move in time.
Okay, tell me about some of the stories that in your experience ultimately led to a deal falling apart.
Most memorable is often, as I mentioned, being able to go out on a maternity leave or switching jobs. Often buyers wouldn't tell us because they feel, number one, we wouldn't find out, and number two, that it doesn't impact the transaction. Lenders do verifications 3 days before closing. We check your credit 3 days before closing. We check your employment 3 days before closing to make sure everything's on the up and up. And a lot of buyers don't realize that. So if you are planning on switching, or you're leaving, or you're getting furloughed, or you're getting laid off a day, 2 days before your loan is scheduled to close, and you think you're not going to find out, we're not going to find out, and we do that check and we find out that you're about to get laid off, the entire loan can be an issue. So one of the most recent things that we came across was with the government shutdown. We were working with a lot of government employees. They could not close on their mortgage because government wasn't open and they weren't getting paychecks, and we weren't sure who's going back to work and who's not. So the recent government shutdown definitely very negatively impacted a lot of home buyers.
Oh, that's tough. That's not something that you can control, and I'm sure quite a few dreams were shattered. Tell me some of the other things that buyers should be aware of and try to avoid doing so they do not sabotage the deal at hand.
Yes, one of the other aspects we mentioned was assets. Be careful when you move your money around. Every time there's a large transaction of moving money in or out of your checking account or your savings account or your investment accounts, lender's going to want to see that. So anytime there's a large deposit, a lender wants to see where that money's coming from. And if you're not able to provide proof of it, it just creates an issue where we cannot use that money for the transaction anymore.
What is considered a large deposit?
It varies depending on someone's income. It's typically 50% of your income. So if you make $10,000 a month, anything above $5,000 is considered a large deposit. So it varies based on your profile and who you are and how much money you make.
What do you feel is some of the most important things that the buyer could do to make sure the transaction is moving smoothly to the closing table?
Yes, being that this is the largest purchase in anybody's life, banks often require a lot of documentation and paperwork, making sure we're crossing the T's and dotting the I's when lending the money, right? It's very important, the flow of documents, making sure you're getting back to your banker with the information that the banker is requiring, and very often not to get frustrated, because it's not just one time that they will need paperwork. Often when you provide paperwork, there's additional paperwork that's needed because of the documentation that you provided. So it may be that when you're purchasing a house, you may have to go back and forth 4, 5, 6 times. And it's important that you provide that information in a timely fashion. If you are away on vacation or can't get the documentation, get somebody else to scan over or email that documentation. Otherwise, it can delay your closing. It's very important to make sure you're communicating with your lender in a timely fashion to make sure that you hit your milestones for your closing.
So don't go dark. Make sure that you have clear lines of communication and you stay in track with your timeline. All great things. Let's just recap, right? One of the red flags that could potentially derail your deal is buying a new car, opening a new line of credit,
Correct.
moving large sums of money around, going dark on your lender. Am I missing anything?
It's making sure you stay on your job, you keep your money in the bank, don't move it around, and don't mess with your credit.
Yep, don't become a big spender. That's not the time. We've seen every single one of these scenarios happen. Make sure you speak to your lender before you make any major purchases or any big decisions. This is a really important time to keep clear lines of communication. If you found this video to be helpful, comment, like, and subscribe, and we'll love to share more.